trading week. Hope y'all are having a great morning, day, afternoon, evening, night, whatever time it is, wherever you are. And that most importantly, you are doing good, that you're happy, healthy, and prosperous, and enjoying life and liberty. That is, hopefully, those are all things you're privileged enough to enjoy. And if you're not, I feel for you. I hope that you get there at some point. Sooner the better. Now, what I wanted to discuss. Here we go. Hey, buddy. Good boy. It's always good to see animals fresh off the start of the day. So, have you seen the new weekly range on Bitcoin? Well, if you haven't, you really should take a look at the VRE charts. Why is that? Well, the VRE chart, of course, with our specially applied Laplace and normal distributions on it, the way we run it at Alpha Trading, right? What do we have? We have the 4-hour Laplace distributions and normal distributions. We have the daily Laplace distributions and normal distributions. And then we also have the daily, weekly, and monthly VRE levels, which include like the central daily range, and then, 3 or 4 support and resistance, if you want to call that, buy and sell lines. And the same thing for weekly and monthly, right? We have central weekly range with about 4 buy and sell levels above and below, and the same thing on monthly with the central monthly range and the buy and sell levels above and below. Now, why do we use such a chart? Why do those buy and sell levels matter? Why do those Laplace distribution and normal distribution levels on the 4-hour and the daily matter? Well, look, when I actually trade, right, I'm looking at those levels because they are very big price magnets. We say it all the time. Those price areas of those levels, they're all very strong price magnets. Now, do I ever look at lower level time frames? So we have more specific levels? I do, actually. In fact, I have like a 1-minute chart where the highest level that I'm really looking at is about the hourly, and I'm looking at the 15-minute below that, and using that as my measurements, somewhere in the range of that, like the 15-minute up to the hourly, and for Laplace distributions and normal distributions. And why is that? Well, that's because, again, those are very strong price magnets. When you're trading like the 1-minute or the 3-minute or the 6-minute or the 9-minute or the 15-minute, right? You can use those 15-minute levels and 1-hour levels very nicely to trade against for entries and exits. Again, that's for scalps, right? If you like to trade slightly longer time frames during the day, you're not doing super fast scalps, but you're maybe taking anywhere from 3 to 10 trades a day. Okay, you still want to look at the lower time frames, but you're probably going to place your entries. You might place your entries based on like the 3-minute or the 6-minute. Okay, but you're still going to look at like the 15-minute as your intraday monitor to see where how it's moving along on the 15-minute time frame. And that's kind of like the default time frame that we show the VRE chart on the live stream. Sometimes we show on the half hour or whatever, but the 15-minute is a really great intraday monitor to have an idea of what's happening throughout the day, right? Because of course there's plenty of scalps happening on each 15-minute candle, right? But as a trader, if you're trading, let's say, you're not a super busy, super high, frequency trader, you're just a retail trader looking to get in a bunch of nice trades and a bunch of nice profit every day, right? And you have a decent sized bag. You're not putting millions of dollars on the line all the time, but you have a decent sized bag, and you just enjoy running some trades during the day without stressing it too much. then, you know, anywhere from like 3 to 10 trades, could be 4, could be 5, whatever, could be 10, sometimes maybe 11, right? But you're not looking to actively trade, you know, 10 times in an hour, right? 15 minutes is more than just an intraday monitor at that point, right? That's actually like the time frame you're looking at for targets for entries and exits, even though you're making your entries and exits on, like, hopefully, you know, nothing higher than the 3 minute or 6 minute, right? Because a lot happens in those time frames, right? A lot happens even on the 3 minute. It doesn't mean you have to make the entry on the 1 minute. I understand that can be very overwhelming, right? But you need to keep in mind, especially with an asset like Bitcoin, which is so volatile, right? And what are its weekly ranges doing, right? If its weekly ranges are super wide, right, then it's a ranging week. Just like if there's central daily range is super wide, it's probably a ranging day, right? If the range is very tight, then it's probably a trending week, right? And we've seen this play out time and time again. These are very high probabilities, right? And generally speaking, especially during the traditional trading week, when the central daily range is tight, let's say underneath 2% of the asset's value, okay? Really tight is like, let's say if it's under 1%, but tight enough to be under 2% of the asset's value, that is typically a trending day, okay? Now, can it be that sometimes there appears to be a trending day, but you only get ranging moves? Yeah, absolutely, that can happen. That's why we say it tends to be, or there's a probability, right? It's not a guarantee. Can it be that there is supposedly a ranging day and you see crazy trending moves? Of course. Again, probabilities and tendencies are not guarantees and assurances. That's why you need to monitor what's going on the day, right? Because look, here's the thing. Trading is a lot like science, okay? We can prognosticate and make a bunch of theories, and we can hypothesize all day long, okay? What makes, and when I say make a theory, I mean loose theory, not a scientific, heavily evidenced theory, right? Which is about as close to fact as anything can get, right? But even then, there's always the possibility or the probability that something can come along and prove it wrong. And that is science, right? Is the process of learning the truth by also learning what is not true. But if I make a hypothesis, my hypothesis is that this tree right here is made of plastic, okay? If I say this tree is made of plastic and I test it and I see that it's fibrous and woody and it has bark that, you know, crumples in my hand and it, you know, comes apart and it leaves, you know, and it's wooden and I can see that it's wood, smells like wood and it looks like wood and it feels like wood, right? And I can take an axe and cut into it and see that it's wood. And I can test it and I can see, oh, look, it's growing in the ground, right? Like a tree does, right? It's not plastic. It's not, this isn't Dr. Seuss Fantasyland, right? My theory is not a theory. My hypothesis is disproven, right? The whole point is to disprove the ideas until I can't disprove them anymore. Once I'm no longer able to disprove something, then I've discovered something and we can move forward, right? There's no moving forward if you have a belief that something, like I believe that this leaf, right? I believe this leaf that just came from this bush, right? This see all this? See all this? This is eucalyptus plant. Yeah, see that? Right? I believe that this eucalyptus plant is actually, you know, a donut. Okay? I can believe it all I want. This isn't a donut, right? But I can believe it is. It doesn't make me right, right? It makes me believe something that's not right. You're free to have beliefs that are not right. When it comes to trading, that's not going to help you, right? You want to have knowledge that is correct. You want to use knowledge that is correct. Because if you use knowledge that's not correct, you're more likely to end up getting wrecked, right? And you want to be correct and not wrecked, right? It's better to be correct than wrecked. which comes down to the next point, right? That is why it's important that we use the tools that we use when we trade. Right? That's why we use leading information. I don't know what you wrote here. I don't read Russian, bro. Sorry, I don't read Russian. You can say that in English. It'd be great. Or in French or Hebrew or some other language I might be able to read. Maybe Spanish or Italian. So the point that I'm making, right, is that it is important when you're looking at the weekly ranges, the new weekly ranges of Bitcoin, right, to see not just if it's wide or tight, because yes, that obviously matters to tell you if it's going to be a trending or ranging week, generally, but also to look at the new daily range to see if the day is going to be trending or ranging, right? Especially if you're an intraday trader, because then you are not just trading once a week, right? You're not just looking at the chart once a week. You're looking at the chart actively throughout the day on any given day that you're trading. And you should be able to see what the asset is actually doing, which is why looking at the 15-minute time frame as a monitor for the day is very handy, right? That's why, for example, I use it as my standard kind of default time frame to use as an intraday monitor. Now, again, do I flip back and forth between the 15 and the 30 minutes sometimes? Absolutely. You know, as the monitor. Sure, why not? 30 could be, or 33 or whatever. Yeah, those are very good time frames to look at. You know, why do I choose the time frames that I choose? The reason I choose the time frames that I choose to look at is there's a bunch of reasons. Okay? The most simple reason, the Occam's razor reason, the one that has the most propensity for being the logical reason to me, is that even HFT bots, which are really powerful and run millions of trades per second, they are ultimately coded by human beings. Even if an artificial intelligence builds them, that AI was built by humans. And even if that one wasn't, the original one was, right? They eventually made that one. It was coded by human beings at some point in the line. And B, it is used, most importantly, used by human beings. Meaning used at the trader level, used at the customer support level, used at the sales level, used at the tech level, used at the dev level, used at the DevOps level, used at the BI level, used at the manager level, used at the executive level. It is used by people who still have their jobs managing big bots that run the markets of capital on the world, right? It's already not people that run the markets. It is robots, but people manage the robots still, for now. Okay? Now, you may have heard there is a 24-hour traditional market exchange that was approved recently for traditional assets. Well, it's actually an options market, and it's called 24X, and it's going to be running 23 hours, not 24, apparently. I guess they need to start with baby steps and show that they can do 23 hours and then maybe graduate to 24 hours at some point. This is kind of inevitable. Right? We've been saying in alpha trading this is going to happen. You go back literally years and see us talking about this a year ago, 2 years ago, 3 years ago, 4 years ago, talking about how eventually traditional markets are going to open their doors to be basically open 24 hours. And the march towards it is inevitable. And you can see 23-hour market calling itself 24X. Should kind of give you an indication of where this is heading. Why is it that they're doing this? Well, first of all, there's already things that are traded 24 hours a day, at least 24 hours a day, 5 days a week, right? And there are other things that trade similar kind of, increasing hours with overnight trading. You can trade traditional assets on a lot of exchanges, especially if you're international. And you can trade CFDs practically 24/7 on a lot of exchanges around the world, because CFDs aren't really the asset. They're like the underlying, they're a derivative of it. So they're not the underlying, they're a derivative of it. So you certainly can trade practically at any time you want, depending on where you are around the world and all that. But the fact that actual traditional underlying markets are being opened up to more hours of trading and are eventually making the move to what is inevitably going to be 24 hours a day, 7 days a week, even holidays and stuff, is just because, look, the people that run the markets think about one thing: how to increase, value to shareholders, right? Profit. How do they increase the profits to the shareholders? And the easiest way for them to do that, right? The easiest way to increase value, meaning profit, to shareholders per quarter, per year, is to increase the number of ways to generate those profits. And what is one of the easiest ways to increase the number of ways to generate profits? Well, if you have a store and you pay rent on that store to be in a particular location, you pay rent on that store 24 hours a day, 7 days a week, whether or not you open or close it, right? Whether or not there's people working in there or not, whether or not you're selling products or not, you're still paying rent for every hour that it's there, right? And if you buy the location, same thing, you're paying for the mortgage or the property tax or whatever, 24/7. So you may as well have the store open 24 hours a day if there is a consumer demand to buy and sell in your store 24 hours a day, right? Like, again, if there isn't a demand, then sure, don't do that. But if there is, do. Anyway, so just to give you guys a clue, since I did, after all, call this video the new weekly range of Bitcoin, actual new weekly range of Bitcoin, you can see the new weekly range of Bitcoin is, if that is tight enough to be a trending week, what about that? Do you think that's less than 2%? Obviously it is, right? The central daily range has moved up a little from yesterday and is now 0.27 again. So a very tight central daily range. So it is a trending day. And we have seen, as you can see, a trending move right there on the day. Trending move with high variance, not a surprise, which hit an outlier there. Close to it. And there you go, mean reversion to that RMLR band. So you can see there, the weekly range has the bottom side of the central weekly range is higher. The weekly range is a bit lower. Central daily range is now above the central weekly range. And of course, monthly range remains down here with the top of at 91,707, the center of 87,517, and the bottom of it being at 83,211. Now, anyway, that is the it has definitely tested the inside of the central weekly range. And obviously, it has tested the central daily range going down and going up and going down again. So it's tested the center. The nice movements today as the asset gets set up for more moves as we get closer to traditional market open. Okay, that's going to do it for now, folks. Happy trading. Oh, yeah, if you want to learn how to trade like this, by the way, and if you want to get like a free chart that has like these tools on it, the AVQ, right, the alpha volatility quality, the alpha laser returns, which shows you divergences and also has a built-in direction predictor, plus the alpha volatility percentile and the alpha trading Pearson correlation, plus this chart, which has all the indicators pre-built and pre-populated on it. So you can just use that and just have to change the source here on like these indicated on this ATPC. You just have to change the source here to the right source, and then that works. Because at the moment, because the default is that it chooses close. That's the way that indicator works. But you just change it to the right source, and then it works. Anyway, so if you want to get all that for free, you just go to the Alpha Trading Discord. That's at alphatradinghq.com/discord. Again, that's alphatradinghq.com/discord. And you go and open up a ticket in the request support channel. When you click in the request support channel, it's free to join, by the way, so it's not like you have to pay to get into the Discord. It's totally free. You go into the request support channel, click on the create ticket button, and just write that you want access to the free volatility starter kit, which is these tools that I just showed you. This is the free volatility starter kit, plus the chart, plus all the educational information we give you. It's all free, plus access to the live streams where you can chat by text and also by voice, plus access to the main chat channels where the VEPS traders share charts and discuss stuff. So yeah, and you can they answer questions. Anybody has any questions, happy to answer questions. So that's it. That's how you get into it. That's how you learn, and that'll do it for you for now. Talk to you later. Cheers.